Good afternoon, everyone. Happy Friday. This is Friday, the 16th of June. Welcome, everybody. Let's go ahead and get started. Gabe Velazquez here with you, transparenttrading-solutions.com. So let's go ahead and get started. Again, I'm going to start another class. I just did a class last week. I'm going to do another one. If you have any interest in this is going to be a free class. Go ahead and hit the link below if you want to subscribe to my newsletter, so on and so forth. Want to spend some time with me. So let's get into at TTS some of the positions. We just put on right into the close. We bought a put on the S&P. As you guys know, the S&P and the NASDAQ, the whole complex here, the indexes have been on a tear. Rationale behind that, the VIX. The VIX today closed at 13.5. That's the lowest level closing now. Here's the thing. We've already tapped that level down a couple, I think 1 or 2 days, but never closed, and it's kind of been hovering around the 15 level. But today it actually did close right on the lows, 13.5. Going back to February of 2020 is the last time we had a VIX this low. Now, again, doesn't necessarily mean the market's going to pull back, but the market looked a little tired to me. We're sitting right on top of the 4,500 on the S&P futures, 440. 640 on the SPY, 445. Looking at the SPY chart, so forth. So yeah, so we are coming into we are coming in with some puts. We were in Oracle earlier this week. We came in this morning short British pound. We got nicked on that for a small loss, and also nat gas. So on the future side, we got nicked on a couple trades, very small losses. I'm using very, very small size right now in this market, but we did make up for some of that with our Oracle trades and so forth. So overall, we've had up until now, we had some pretty good weeks. Generally speaking, this month is shaping up to be pretty good. Again, no guarantees, and not all the trades work well. We're only halfway in the month, so I think we're having one of our better months this year. But again, nothing's guaranteed, obviously. So let's take a look. Where we're at. We obviously had a Fed very confused. On one hand, they paused. Then on the other hand, they tell us they're going to raise again. But with this momentum in the market, with AI and all that, market doesn't care. I mean, it's almost like the Fed is out of the picture for now, which is interesting. Also notable, I talked to you guys about this on Tuesday, ECB. Well, ECB raised rates by a quarter point, and in fact, part of the reason why we got nicked on the British pound is because the dollar fell pretty sharply as a result of the euro rallying because of their hiking. They're continuing hiking, very hawkish. In Europe, they're going to fight inflation no matter what. They're actually much more they're clear on their messaging than our Fed here. Our Fed's all over the place, muddled up. In any event, that caused the dollar to really sell off very sharply. And if you watch your currencies, all the currencies rallied. The European currencies more than anything else. The euro, the Swiss franc, British pound. We did get a little bit of a rally in the COM dollars, Canadian, New Zealand, and Australia, but not to the extent that these European currencies. And so now let's start with that, since we're on the dollar. So the dollar has come off pretty sharply from that 104.60 area that I mentioned the other day. And we are sitting at a breakout point at 102.34. We remember in between March and April, we were kind of chopping around sideways between 100, 101, something like that, 101 and 102.36. We're sitting right at that breakout point, which generally is, kind of, I call that reversion to the mean, where you have a base, rallies out, retest the basing part, and typically will at least, hold there. That's kind of where we're at on the dollar. If it breaks through that, then we probably head all the way back down. And I think ultimately, I've talked about this if you watch the videos from even earlier in the year. 100 is the ultimate target for the dollar index, the Dixie. So also, what will take the dollar to that 100 mark will be the interest rate. So if interest rates continue to climb here in the U.S., again, I mentioned this on our last video here on Tuesday, the corollary between U.S. interest rates, Treasury rates in particular, the 10-year, the 30-year, and the 5-year against the dollar. And you saw that again today, where we had a little bit of a rally in the bond market, but you saw the dollar kind of pause as rates kind of stabilized a little bit. And so, but all in all, the bond market, if you're watching the charts of the bond market, especially the 10 and the 30-year, the 30-year in particular is set up for a really nice range now, 128.13, 126, very clear, defined trading range in the 30-year, 10-year, a little bit more muddled up. I'm still looking at the 10-year. I mentioned this level on Tuesday's video, this 112.16. We came down there, did attempt to rally. Again, all kind, just chopping around. If we can break above 114 on the 10-year, I think we probably head back up to about the 115. But generally speaking, interest rates and in particular the bond prices are just very, very choppy. One day up, one day down. Been very, very challenging to trade that market. But that is, by the way, that is going to be really if we get the 10-year breaking down below this 112.16, I think that will actually finally put some pressure on the NASDAQ, which has been really ignoring everything. Now, underneath the hood, if you look at the NASDAQ, we are getting a little bit of slowdown in momentum in some of the semi stocks. NVIDIA hit another all-time high. So, again, it really is starting to feel like a mania there. And as we know, I was around in the late 90s, 2000s. When you get these kind of manias and momentum, you just don't know where it's going to stop. And so that's been tough. So that's why we haven't really, up until the puts we just bought into the close, we have not been shorting any indexes for the last month and a half. We have not shorted any. We did try the SQQQ about 4 weeks ago. And we have not, on the future side, we have not taken any kind of shorts. If you have been trying to short the market to any extent in the last 3-4 weeks on any so-called supply levels, been tough, been blown out. On the other hand, we haven't had any substantial pullbacks to buy. So it's been, the way if you look at your charts of the NASDAQ, the S&P, the trajectory has been a sideways for a couple days, a burst. If you missed the breakout, you obviously didn't catch anything, and then go sideways. Like last week, as you remember, all sideways all week long, and then we got another pop up. And generally speaking, this week again, kind of just been sideways. And that's even though, again, unless you have the wherewithal or you want to get into some of these breaks and then hold on, you had to sit through that's been really the trajectory. So now again, 4,500, we hit a high this morning in the S&P futures, 40 literally what another point of it's actually I like to say it's not rocket science. These algos, these round numbers, right? So I think today's high was let's see, Today's high was 493.75. So right up against the 4,500 level on the S&P. Um, and we did pull back. I'm actually looking more at the SPY chart because again, with the rollover, you get some kind of distortion on the charts and so forth. So the SPY, if you look at the SPY chart, right around that 445 area is where you see some levels on the SPY, which is really what we're paying. And we actually closed right near the lows today, and with the VIX closing at the 13 and a half, I thought it was a good idea. By the way, the other rationale, if you haven't traded options, is the VIX at 13 and a half, very, very cheap options. Literally, you're not spending a whole lot of money for at the monies. At the monies are like ridiculously inexpensive, and that's the time you want to be buying. If you have some stocks that you want to hold on to, if we get a correction, now is the time to buy insurance. Insurance, because of the VIX being as low as it is very inexpensive. So this is the time where you want to be buying cheap insurance against your portfolio or whatever. That's one of the great things about the VIX being this low is the option premiums because the volatility has literally collapsed. On one hand, this is the time to be buying because you don't know what's going to happen. And again, on one hand, you think, well, does this mean that the market's going to sell off? It is getting a little tired. There is a lot of complacency. We're getting a lot of sentiment data that suggests that the public, and it's really uncanny how, back in October when I was telling you guys to buy everything, everybody was bearish and everybody was telling you how the market was going to crash and how everything was so bad. Now we've rallied, 20, 21% off that bottom. And now everybody likes the market. I mean, after doing this for 35 years, it's really amazing to me, right? People hated the market back in October, and now they're starting to warm up to the market. It's just amazing. Again, that doesn't mean necessarily that the market can't, is just going to, flop over and, as I've been talking about it, but you have to just start turning cautious. That's all. You have to really be careful to not chase because what happens is, as I wrote over the weekend, is when the market is and the VIX is this low and we've had a 20-25% rally and everybody's telling you, everybody's starting to get warmed up to the market. That's when you look for bad things to happen. Conversely, when we're down at the lows and everybody is super bearish and so on and so forth, that's when you look for the positives and start looking to nibble at some high quality companies. Clearly we're in the other side of the boat now. And again, not suggesting that we're just going to crash, but by the way, even if the S&P just pulls back, 5% down to, I don't know, 4,400 or 4,300, that's actually not a bad thing. That's where if you want to get engaged on the long side, that's probably what you need. These manias, the further they stretch from any technical level, I heard some people talking about how this kind of mean reversion or sigma 3, where you have a certain percentage, kind of how far above a certain average or whatever the averages are. It's pretty Bollinger Bands and all that kind of stuff, right? So when you go up too far too fast, you usually get some kind of corrective move. But we'll see how that goes next week. This week, obviously we had the Fed. We already talked about that. We had ECB. I already mentioned that on Tuesday. The Fed was really almost coming off the, they're really not as impactful as they have been. It's going to be interesting to see in July. Again, they're pausing. Maybe they raise another quarter, whatever. It doesn't matter. I think the market's just deciding that they're over and done with. They're going to pretty much finish the tightening cycle. That could be a mistake, especially if we get some hot inflation numbers again. So in regards to that, I don't know if you guys are watching the grain markets in the last 2-3 days, right? Let's get into that. The grain markets have been on a tear. Soybeans. There's a drought. There's some drought conditions I've been hearing about. Soybeans have had. I mean, look at your chart of soybeans. They went from 1270. I've been talking about soybeans up all the way up to 1466 in literally about 2 weeks. We also had wheat really surging as well, up to about 725 from about 590. Corn also. So the whole grain complex is been rallying pretty hard, and so is that inflationary? I don't know. We'll see. You also know beef prices have been going up. Energies are still depressed. Now, speaking of energies, we did have a nice pop in nat gas finally. Oil is still more or less just kind of meandering. Similarly, I think oil is probably 67 to about 75 for now, and then the broader range up to 83. Still kind of in no man's land. Not really that engaged in the oil market until it maybe goes up to about 75, and then if it breaks above that, then you probably have a rally back up to 83. Still long-term bullish on oil, but in the interim, just very hard to trade on the short term. More or less looking at USO options on that. Nat gas did have a nice pop since yesterday's employment. Now, again, we've had these false moves in the nat gas market. If you guys have been tracking that, kind of been dead. And then we get these bursts of movement. We're sitting right up at that 267, 268. There was a gap. We did attempt that this morning. Very, very tiny risk, less than $100 with one of the mini 25,000 MBTU contracts. We were up a little bit and then obviously just went right through. So now if we can break above 270 on nat gas with any kind of durability, in other words, because we've had so many false attempts at rallies in nat gas, as then I think we get to 3. I'm still of the idea that nat gas probably stays in a massive range between 2 and 3. That is the general character of that market. If you go back, save the Ukraine thing, that was an outlier clearly. But if you go back prior years, other than that unique situation with with the Ukraine and Russia thing. That's typically the way this market trades. So obviously that we're back to that. And so I think we probably range between 2 and 3. That still will present some huge opportunities regardless on the future side. So, it's starting to perk up. We, as I like to tell my members, we'll prior to that, we're taking a glance at it. And as of, in fact, we were actually watching the report come out, and you can see that big burst. We got one more threshold here, the 368, 369. You can clearly see that on the charts. Got a line drawn on that, and we'll see if that clears. I think we got a shot at 3 on that. You guys can look at also oil. That's down around $3. Also, cold, KOLD is another one. That's an extremely volatile. It's about a $60 number. It's gone from 90, goes from 90 to 50. So that's an extremely volatile. But if you want some options in that, KOLD is the symbol. That's the ultra short. Oil is the ultra long, and cold, KOLD, is the ultra short ETF in nat gas. And then the straight one-on-one is UNG. So if you want a kind of a more conservative way to play nat gas, if indeed there is an actual move, that's been the case. I mean, we've been in and out of oil, and but it just hasn't moved. So maybe this is the time. I don't know. We'll see what happens there. Other than that, really, the currencies, we just talked about British pound that had a massive run up. There are some levels up around 285, right around the 280, uh, 129. I'm sorry, 129 on British pound. Yen had also their announcement, more or less range trading the yen 72.45 to like 71.32. You can clearly see that on the charts on the Japanese yen. Not a lot going on there. What's interesting is the Australian dollar is coming up to some decent levels as well, up around the 70 and a half points. Look at your charts on the Australian dollar, Canada, also along with all the currencies, also coming out some decent levels up around the 76.50-ish area on Canadian dollar. Peso really having that rollover gap and not really doing anything. Remember, I've been talking about that, but looks like that's also kind of settled into some kind of range trading. So nothing going on there. Other than that, and surprisingly, gold is doing nothing. Gold, silver, nothing. Even copper. Metals, and it is kind of surprising if you think about it, with the dollar plunging. And I think what it is really with gold is because the market is so strong right now, stock market. Typically you get people going into gold when things get a little bit dicey in the stock market or whatever. And I think the fact that the stock market's been so strong, and we got these many manias going on with AI and so forth. I think that's what's going on. And so it's really surprising, because even crypto, everybody talks about, well, it's a gold or crypto, or is crypto taking away from gold? They're both kind of dead in the water, right? As you know, crypto and gold are both dead in the water. And I think it's just really interesting. I think the apathy there, and the fact that the stock market is really doing great. I think all the money's going into the stock market, and so forth, into the AI type of stocks. And we didn't do anything this week, by the way. I mentioned Tesla. We didn't do anything with Tesla this week. Tesla was literally consolidating between I don't know, I think the low was like about a 10, 12 point range all week. So we did not do anything with Tesla. Up until now, we've done great with that, but I was watching it all week, and it just, it just didn't do anything. The options are so fat that you got to get a big move in that thing, and the fact that we're just kind of range trading. So we're going to leave that alone. But next week, I think Tesla is ready for a move. And again, going to be predicated on if stocks pull back next week, which I think we may. We're taking a small risk with those puts. If we do pull back, going out to, by the way, those puts are going out to next Friday, a week from today. And we do have a closed market on Monday, by the way, Juneteenth. NYSE is closed. However, as usually happens with these U.S. holidays, futures markets will open as usual on Sunday afternoon, trade all the way through Sunday into Monday, close early, and then reopen on Monday afternoon. And then, obviously the NYSE reopens on Tuesday. So very, very thin trading, probably Sunday through. But if something happens, could happen. Part of the reason why I put the SPY on, because we don't know what could happen over the weekend, especially with thin markets and so forth. Other than that, really, that kind of sums it up. Next week, we got Powell speaking on, I believe it's Tuesday or Wednesday. We've got Bank of England, the Swiss bank on Thursday. So that should be moving some markets as well there. So we'll see what happens. Okay. All right, everybody. Any questions? I know I've got some people. You guys, any questions in here? If not, have a wonderful weekend, long weekend. Happy Father's Day to all of us dads out there. Hopefully you're going to get a tie or or a saw or a drill, right? Or something dads get, right? I'm not very handy, but anyways. All right, everybody. Have a great weekend. Happy Father's Day. I'll talk to you on Tuesday. Okay. Take care, everybody.